Hey guys, welcome to another episode of The Aspiring Entrepreneur. I'm your host, Hamza Chowdhury, and welcome to our Sunday night stock recap. We're getting ready for the week. It is March 7th, 2021. And, what a rough last 2 to 3 weeks we've had in the market. I mean, it's been incredibly volatile. We've seen stocks that were essentially really going up and up for the last few months. Tesla, Palantir, we've seen FCell, Plug, CCIV, a lot of these stocks that have just been skyrocketing for the last few months. We really have seen them essentially go down 50+%. In some cases, they flush and then they come right back. So it really tells you what's going on in the market. And the hard part, I think, for a lot of people is that, you're getting margin calls, so you're buying stocks maybe with other people's money. And as those stocks are sort of tanking and they require a certain amount of capital to keep the stock, you're essentially having to either sell that stock or add essentially additional capital into your account. And so if we know a lot of people are new traders, they've maybe added some stimulus money, they've added maybe a few $1,000s, that might be difficult. And so you're seeing a lot of people sell out of the market. And again, guys, we've talked about, trading without a plan. And one of the things that I've noticed is sort of a trend that's been going on is a lot of these YouTube professionals or so-called professionals, a lot of people are trying to get you to buy their programs. Imagine that you're panic selling or you're nervous, you have a spouse or someone that you're maybe even intimidated about, afraid of telling the news that, guess what, I've just lost, essentially what I put in, or whatever the case is, guys. It's not something that we should be trying to profit off of, right? As providers, as creators of content, as I've always said, we're a 100% free content channel. We literally base your support by hitting the like button and subscribing to our channel is the only way that we get support on this channel. And it just amazes me that people are going to come to you and essentially say, hey, come with me, sign up with me. You've lost everything. Now, why don't you invest these few $100s in my program and I'll give you the key. And the reality of it, guys, is they're all full of BS. There's no one out there that can give you the winning formula for you to be 100% right. But what we can do, or what I can do at least, is personally is educate you. I can share with you, for example, trades that I take, the setups that I like, some of the lessons that I've learned over the 12 years that I've been trading. And, the thing is it's an experience. And so I've mentioned the last couple of weeks, I've been perfectly honest that, guys, I'm not trading a whole lot. Why would I want to continue to add to losing positions that I've mentioned I've had to back hold and try to find the bottom? And that's what this market's telling you is you won't be able to find the bottom. Look at Tesla. Right? It went from 8 to 7 to 6 to 5s. Who would have ever predicted that? I couldn't have predicted that. I thought we were trading sideways between 6 to 8. Didn't expect us to get down to 530. And so I just want you guys to, especially if you follow this channel and you've supported, thank you so much. But I just feel bad because I feel like people take this as an opportunity, one, to promote themselves, and two, to convince others that they will be the ones that you should sort of pay, these gurus, when the reality is nobody can predict the market, guys. That's what makes the market the market. What I always tell you is, follow your risk strategy. Sit, we've talked about the last couple of weeks, sit on cash. Have 30% of whatever your portfolio is, just have that as cash. Just sit there, right? And what did we talk about? What's the confirmation? The confirmation is when we start seeing, bullish candles, right? Where we start seeing the fact that, daily candles, we're making higher highs and higher lows. And what we're seeing today in this market is lower highs and lower lows. So why would you want to be that person trying to find the bottom? Okay. So once you see the proper daily candles, and we talked about, trend reversals, then you can get involved. But in the meantime, you don't need to subscribe to programs. You need to pretend. It's easy for these traders who, try to pretend that the market was going in their favor, which is a downside that, after the fact say, well, look, we told you so. Well, no, you didn't say anything. Everyone's been saying, of course, with all the stimulus money and of course the $2 trillion that we're going to see pass in the house this week, we're just going to see more money in the market. Okay. So I definitely expect the market to make a rebound. And I've continuously said, especially here on the SPY, right, is that we still risk potential downside risk to me where the anchored VWAP in the 200-day meet around the 345, 346. And this can continue up, right, to up to the 350. So whatever that ends up being, to me, that's my downside risk as a market. But guys, think about what's happened. The economy is reopening here in the United States. People are getting vaccinated, right? The unemployment rate has dropped significantly from where it was a year ago when we shut down. So ask yourself, what has really changed in the market other than some of these stock and high flyers going really, really high, right? And they're just coming back down to normal levels. And if you don't believe me, check out what happened to Tesla and Apple, right? Right after the split in September. What happened to those stocks when they were just going skyrocket on the bullish side, right? Tesla went from $540, guys, down to $320, a drop of over 40%. What did Tesla do from 900 down to like 40%? So please, whatever you do, again, this is a purely entertainment and educational video. I'm not here to give you any financial advice, but just don't panic sell. And that's what they want you to do. And just follow your plan, know your entries, know your exits. And the key is just don't follow anybody, including myself. Okay. You know, if anything, I like to give general takeaways, general advice, but I don't like people, you know, trying to follow others and worse off panic sell and lose their entire portfolio. And so, you know, margin calls, I think, are the reason why we're seeking additional selling pressure. And like I said, just manage your risk. If anything, you know, what we've learned is manage your risk. So the first stock we'll cover on today is, of course, our favorite stock is Apple. And so what I've done here is just identified, you know, key levels. You can see this thicker green line represents a sort of go heavy level for me personally, which is the 117.80. We've had this level, guys, back, you know, for many months, pretty much since the split. And my heavy resistance level, I call them the 3 levels of resistance levels that I've identified recently. It's going to be here at the 123 level, which we hit on Thursday, and then also the 125 level, which we've also continuously hit. So these are the 2 levels that we've hit over the past week. And then, of course, what we thought was our sort of strongest support was the 127.50. So you can see we sort of rebounded the market and we traded into this level, and then we sold off, right? So this is sort of a retest. So you hit some lows, you retest some recent highs, and then you retest those lows. And the key here is look what happened, right? We actually came down here back to where we were trading when we had this sort of sell-off, okay, a couple weeks ago. And so what we don't want to see is that now we continue downward and we break this 117.80 level and we close, you know, below that, right? Because then we know that, yes, the SPY does want to come down, and we risk, like we've mentioned here on Apple, the 114 level, because this is where I can see the potential bottom if we continue to sell off. And so that's what I would be doing, is looking for, as we close above these levels, okay, the levels I've identified in red, I see them as potential support. But in order for them to be support, we need to see them constantly, like this day here, right, where you bounce off a support, okay, but then you can't bounce off it again, you fail. So that's not a support, that's still considered a resistance. And so 117.80, I'm going to stay by that as one of our strongest supports. And like I said, the downside risk still for Apple is going to be the 114. And then, like I mentioned, the 3 levels of resistance that I would be looking at for Apple. And like I said, with the stimulus, I'm pretty confident the market's going to start rebounding here. We've already seen massive haircuts on stocks. I mean, Apple's $25 off of its recent high, and so that's a 25% discount. I mean, there's just a ton of these stocks are just trading at a massive discount. Tesla, no different. Probably one of the more volatile stocks that I've seen. Mentioned back here during earnings that I saw this going back to 700. It retraced back up to the highs and then is completely sold off, and it's been one of the weakest stocks in the S&P. And so again, identifying the 3 levels, you know, here clearly you can see we had a good bounce off on Thursday, essentially the $600 level, and then we traded pre-market, and then we just failed completely that level. But you can see we consolidated pretty well at the $600 level. So I'm going to go ahead and keep it sort of as a resistance line, just because the fact that we, you know, have been trading around that. What I want to see is clearly tomorrow, definitely a test here up in the 660s or the 658, and then see how the sort of market reacts to Tesla trying to get and reclaim some of the, you know, the massive losses that we had. I mean, we were just at 744 last week, and then we just sold off, you know, another $100. And so it's just been completely volatile. So the first level, you know, closing above 600, and then of course testing the 660s, and then of course testing and closing above that level gets us up. And one of the go heavy levels prior to this volatility in the market for us was 695, and I see that clearly as something that's very something that I can see coming back. And so again, downside risk, right? You know, I said 470, 480 sounded like it was impossible, guys. We got here all the way down to 540. I mean, it's just been incredible. We're talking about 100-day type of, you know, swings on Tesla, you know, almost $100 today. That day was, the high was 627, the low was 639, guys. So we're talking about $90 swings. It's just incredible, the volatility we're seeing. You can see the pickup in the volume, and then you can start to see again the, you know, what we've been waiting for is this is still, you know, the momentum slowly flattening out, but definitely on the RSI we're oversold. And so I expect, the buyers to come back in and the funds start buying back in. We had plenty of consolidation in the 600 range. And so hopefully, long term, you'll see, right? What are we doing with Tesla? We're clearly still uptrending. Okay. This isn't a downtrending stock. It's just simply a correction. Okay. So again, the downside risk is potentially in the high fours. But if you're long term bullish on Tesla, then you can hold on. But again, don't forget to pay yourself, which again, if you're a long bull on Tesla from 400, I would have paid myself up here in the 800s for a 100% return. Okay, so that's how you play these things, guys. You pay yourself, and once you trade below the 50 and you're bearish on the stock, then you're waiting for confirmation, right? And when we see the engulfing candle, which we've talked about, right, engulfs these previous daily candles, and you start to confirm a trend reversal, then you can go ahead and dip buy. But don't be this person that's trying to find the bottom and you're just adding and adding and adding. You're out of cash, you're out of margin, and then you just pressure sell. Okay, so don't fall victim to what the market makers are doing. Palantir, I mean, just incredible. I mean, if you would have asked me on earnings that, hey, we're going to get back down to, $20, I mean, we haven't traded $20, guys, till back here, right? Way back here, on the, November. And just keep in mind, we started trading the stock in September. And so it was just a massive, massive dump. The volume's been incredible since the earnings and the lockup period. And so again, guys, the buyers are in these stocks. Why do you think the big guys are buying and adding shares? All the big cats are adding shares. Why? Because look what happened here. We traded sideways for such a long time. And then what happened here on this day? Go back and remember what happened this day. It wasn't demo day. Demo day was on the Tuesday. This was 2 days before demo day. Out of nowhere, at Palantir felt heavy. And all of a sudden it goes from $23 a day before to $25, all the way up to over $32. It goes up over $7 on no news, just as an anticipation event that's a few days away. And so the buyers are in these stocks, guys. It's just that you still have sellers. And so you got to let the sellers just get done and be done with this stock. And of course, we know, again, RSI is clearly towards the oversold. We know that the momentum's really right here. It's flattened out. Right. And so once we see this crossover, we'll start to see a trend reversal and we'll get back up here. And we even have a gap fill here. I mentioned around the 3150. And so clearly you can see, and then you can also see the 50 days really flattened out. Okay. So the buyers are in here. So we just got to get the sellers flushed out. And we've talked about it several times that how many millions of shares the executives have done and sold, and it's unfortunate that they didn't believe to hold on just a little bit longer. But, the moment they could sell, they did sell, and that's fine, and let the Cathie Woods and all the other retail traders buy these stocks. And that's what a lot of these stocks that are hurting, are essentially retail stocks. Okay. The final one's Clover, guys. Same thing. 3 levels of resistance, 815, 925, and 1050. I mentioned on Friday's video. I'm more interested in selling at 1050, knowing that the 50 days all the way up here around 13. I just feel like this is such a steal for the stock. Now, yes, we haven't seen the trend reversal. We don't have the engulfing candle. But tomorrow, if we close above 827, which if you see, we closed around 880, 784, hit about a high of 8. I think we're there, guys. The first really major green candle with the longest wick that we've seen on any of these candles, right? So the rejection of the price, buyer stepping in, making the newest lows for the stock, which, IPO'd back here in was that June. And so, guys, I definitely see, a rebound, and I'm long bullish on the stock, and I'm going to hold on to it. I mentioned I held on, and I still held on to my shares, knowing that I still believe in the stock and think that there's a lot of potential, and it's just general market weakness that's sort of gotten us, the last few days to trade really at a major discount. And, Chamath is, people keep talking about retail traders are losing. Well, Chamath's not a retail trader. I mean, he's a major multi-billion-dollar trader, and all of these guys are hurting. And so for people to go out there and say, well, retail traders are the ones buying the Clovers, buying the Palantirs, and they're the ones hurting, that's not true. Funds are always in stocks. Funds are always buying and selling stocks. They're not just sitting in cash. They're always taking their money. They're not going to be flat, right, and not investing their money, because then they're not making anything. And so they're in these stocks. And so again, holding on to stock, my game plan is to sell right in here, right going into right in this resistance, 1050. Okay. So remember, I bought shares over here in the low 9s, and we've essentially sold off. And now we're sort of, hopefully tomorrow, as long as we can close above this first level of resistance here at 815, around 825. Again, I can see a trend reversal, but I want to sell coming into 1050. Okay. And that's my personal game plan. Okay. So you follow your own game plan and what you're comfortable with, but that's my personal game plan. Okay. Is to sell in here, realizing that I think the stock is way, way, way oversold. Of course, the momentum is flattening out as well, but you can see we're way oversold on the RSI. Okay, so definitely I can see us getting back up here. Okay, and we'll see a trend reversal. And this stock's just been beaten up since the Hindenburg report back here. And that's what they do, guys. They're short sellers. What do you think they're going to do? They're not going to give you good news. They're going to give you the bad news so that they can continue to make money. Okay, so don't fall victim for that, guys. If you have any questions or comments, I know it's been a tough week, last few weeks for a lot of people, so feel free to post them, guys. As always, if you did enjoy this video, I appreciate, if you do hit the like button and subscribe to our channel. We're a 100% free content channel. And again, guys, hang in there, stay confident, trade with the plan. And again, you don't have to trade every day. Sit on your hands. I sit on my hands all the time just to watch charts, learn, and see what the market makers are doing. Where did I go wrong? What trade did I take that I wish I didn't take? And so ask yourself, why did you take that trade? What was the specific thing that you saw that made that trade make sense? And take and reflect from that. And the only way you can become a better trader is by reflection. Okay, so I hope that helps, guys. As always, take care, and I'll see you guys tomorrow in tomorrow's daily recap. Take care. Bye-bye.